Hi, this is Bitcoin Asset Research with Allard. Today I'm going to talk about why Bitcoin is a long entropy position. This comes from a question that was asked in an earlier video I did about MicroStrategy being added to the NASDAQ 100. Here Ellen Dower asks, what do you mean when you say that Bitcoin is long entropy? Is there a video where you can go into detail on this? And I thought this was a very interesting question, so here is that video. Just to set the stage, entropy is a scientific concept that is most commonly associated with a state of disorder, randomness, or uncertainty. And the second law of thermodynamics is that entropy will always increase over time. So we can translate entropy to chaos and volatility. So being long entropy, having a financial position that is long entropy, means financially benefiting from chaos and volatility. So why is Bitcoin long entropy? Why does Bitcoin benefit from chaos, volatility, disorder, randomness, and uncertainty? This is the question that we are answering. There are two answers to this. One way you can get there is to use first principles thinking. This is knowing something a priori or before the fact. So we don't really have to observe anything that happens, and we can just draw a conclusion based on what we know about the world and what we know about the asset class itself. And then the second way is to use empirical evidence or repeated ex post after the fact confirmation. Now, if we go the first principles route, the simple answer is that Bitcoin is long entropy because it is decentralized while being accessible and reliable. Now, decentralized things cannot be stopped. This is just a general rule of thumb. Centralized things are very easy to shut down, but decentralization protects something from stoppage just because there's no single point of failure. But for a decentralized thing to be actually long entropy, it also needs to be accessible and reliable. When things are bad somewhere in the world, accessibility and reliability are required for people to run to the long entropy object. This is how a long entropy position financially benefits from entropy, because when something bad happens, when entropy occurs, people need to be able to run to that long entropy position. Now, in Bitcoin's case, it is a digital bearer asset, which is accessible to anyone with internet access. And it also moves at light speed through cyberspace, which makes it highly reliable as a way to transport or store value. When something serious happens, there's often this flight to safety, and what people run to are generally called safe haven assets. Today, this is US government debt or gold. And you can see this because whenever some terrible events happen, US yields tend to drop and gold tends to rise. So when US yields drop, that just means that more demand is pouring into US bonds. This is really a long entropy position of sorts, and both score really high on the qualities we mentioned. So US government debt is very reliable and accessible, and gold is obviously quite decentralized and reliable. The problem is that both of these things have a critical weakness for certain kinds of entropy. The value of US debt depends on the continued economic and military dominance of the United States. And this is, of course, subject to natural disasters, cyber attacks, political or social turmoil, or cultural degeneracy. Any of these things can definitely break down the United States military or economic capabilities, and that would call into question the value of US debt. And the critical weakness of gold is that it requires custodians to move around, which is a continuous attack vector for entropy. Bitcoin is the only thing that is resistant to all the entropies which still permit life as we know it to exist. Now, why did I phrase that kind of in this strange way? What am I really talking about? If the internet goes down forever due to entropy, then there won't be Bitcoin, but there also won't be civilization as we know it. So replace the internet here with electricity or cryptography or chips, and you have the same exact result. That if any of these things went down, the world will be a very different place from anything anyone alive has ever experienced. So in summary, the most bullish case for US debt is really the permanent repression of civilization. It requires a status quo to continue on forever, and that means all the pros and cons of US domination must be persisted throughout eternity. And the most bullish case for gold is the end of human civilization, because it would require that these things, the internet and electricity and chips, would require all of these things to go away for us to return to a true gold standard where physical gold is just traded peer-to-peer. And don't go on to say that it would be possible to tokenize gold in some kind of digital form, because the custodian becomes that centralized attack vector. Fiat currency itself originated as tokenized gold. Every dollar was exchangeable for some amount of gold, and yet that has devolved into the current fiat system that we know today. And the most bullish case for Bitcoin is just massive entropy and change, which does not end the world. And really, if you think about it, this is the default state of human affairs. No matter how far you are in the future, if you're even watching this video, what I can guarantee has happened is that the world has not ended and there has been massive entropy. There has been massive amounts of random events that were chaotic, and even so, the world has not ended, hence you're still watching this video. So you have to think about it that throughout the entire course of human history, this is how things have been. You've had entropy, but the entropy did not end the world. And really what you have to understand is that Bitcoin is the only thing that is capable of responding extremely well in this default state. It's the asset that is decentralized, accessible, and reliable enough to be the safe haven when all else fails. So when you have custodians that have failed, when you had the US military industrial complex fails, or you have the US economy is no longer the premier economy of the world, when all of those things have failed, Bitcoin will still be alive and well, and it will be the thing that people can run to as a safe haven because of its decentralization. And that is why Bitcoin is long entropy, just from first principles alone. Now, I just want to reiterate, we didn't need to know anything about how Bitcoin actually behaves. All we had was based on our understanding of the world and how human action works, and then we logically deduced that this would be how Bitcoin behaves as a market asset. Now, the next thing we got to do is find the empirical evidence for Bitcoin being long entropy. So that was part one, where we went through the first principles approach, and now we're doing part two, where we are finding the empirical evidence of it. And there's really three steps or three exercises to do to see this. So the first exercise is you should think of all the big events that have happened from January 2009, when the Genesis block was mined, to December of 2024. And here's a quick list that I made when I went through this exercise. So this is a lot of random things that happened just in the last few years alone. All of these things are entropy, and then you have to look at how Bitcoin has actually done, and this is what that chart looks like. So from 2010 to today, this is an asset class that has really done extremely well given all of that entropy. And when you compare this performance to some of the other performances, like this is the S&P 500 measured in Bitcoin terms, the S&P 500 definitely has not done as well. We can look at the chart for gold when measured in Bitcoin over that time, and gold also has not done that well. Even as a flight to safety or a long entropy position, we see that Bitcoin is the superior one here. And here's the housing price index, and that chart also looks quite similar. Now, the second exercise would be to identify points of Bitcoin surviving major adversity and still coming out stronger. Because if Bitcoin is able to do this, if Bitcoin is able to survive adversity, that means it was able to handle entropy and also emerge stronger, and this would make it a long entropy position. And for that, I have some of these items. Yet 2021, nearly half of the Bitcoin hash rate was in China, and China did a ban on cryptocurrency and cryptocurrency mining. This was the aftermath of it. I think Forbes basically nailed it. After China's Bitcoin mining ban, Bitcoin is stronger than ever. We can see right here on the chart of hash rate over time. In early 2021, the hash rate was about 185 exahashes. And then after the China mining ban, you can see the clear drop off in the chart where it hits 85 exahashes. But now it is well over 700 exahashes. You have stuff like the block size wars, in which Bitcoin had to reconcile with whether they wanted to create big blocks or keep the block size small. You have the Mt. Gox fiasco, which taught everyone the value of self-custody. And then you have this change in how Bitcoin is understood, from money laundering to spot ETFs. Here we have Larry Fink in 2017 calling Bitcoin an index of money laundering. And then fast forward 7 years later, and Larry Fink says that he's a major believer in Bitcoin. This kind of shows how, given the adversity of institutional skepticism, Bitcoin has ultimately prevailed and come out on top, including being the subject of some of the most successful ETFs ever. Back in 2021, President Trump called Bitcoin a scam against the dollar. And now in 2024, Trump has promised to be the pro-crypto candidate, as well as launching a strategic national crypto stockpile. And now here's exercise 3, which I think you'll find some shaky evidence. It's not really the best, but it really comes down to observing the moments where a market event was followed by a flight to safety. So what do I mean by this? Back in 2023, Silicon Valley Bank had collapsed, and we had these things happen. The USDC stablecoin had depegged, financial stocks kind of cratered, and Bitcoin shot way higher. And you can kind of see that over here. March 10th, 2023 was the collapse of Silicon Valley Bank, and March 10th, 2023, here on the chart, this is right after March 10th, Bitcoin literally surged from under 21,000 to over 27,000. And then it's been going up ever since then. So this is one of those examples where you've had this high entropy event within the fiat system, and Bitcoin responded extremely well to it. Now, of course, there's also counterexamples of this, and here is a counterexample that happened fairly recently. You had the yen carry trade blowout in August of 2024, and everything collapsed and volatility surged. And admittedly, Bitcoin did not really handle this well. If we go back to the chart over here, you can actually see it right here. There you have August 5th, and you can see that top to bottom, this was a pretty heavy drawdown. And to be clear, all risk assets collapsed, the VIX surged like crazy, but this was an event in the fiat system that if we truly believed Bitcoin was long entropy, we might have expected Bitcoin to shoot up from this. Now, there were some theories as to why this crash in Bitcoin actually happened. One of the most compelling things that I saw was that crypto was the only thing to trade on the weekends. In this case, being a 24/7, 365 asset class, Bitcoin actually did serve as some level of protection because the yen carry trade blowout caused a lot of margin calls. And if you have margin calls that you need to meet, and this was happening during the weekends, then crypto was the only thing that you could sell in order to meet that margin call. So in that sense, like Bitcoin sold off and then they used that cash to cover the margin calls. Like, I don't know if that's even a compelling explanation. Overall, I see this as, it proved that it wasn't a long entropy position for this isolated incident, even though there were other isolated incidents like the March 2023 one, where it did prove to be a long entropy position. So that's why I say, like, with this exercise, there's definitely some shakier evidence. Now, what happens in the future? This is really the most important question. So far, Bitcoin has moved very much like a risk asset. It's actually been in lockstep with TQQQ for a long time. TQQQ is the 3x leveraged NASDAQ 100 ETF. We can kind of see that price action over here. In the 5-year chart, TQQQ and Bitcoin has moved pretty closely together. Here we see the pandemic sell-off, and then we see this rise from the zero interest rates, and then kind of this collapse after inflation returns in 2022, followed by this rally that we are currently in. Now, my prediction and expectation is that one day it will decouple from tech stocks and become its own thing, and the correlation will start to head closer to zero. What may be needed is a serious event in the fiat system to really trigger this decoupling, and such a high entropy event could really be the thing that causes more people to wake up and realize that Bitcoin is this long entropy position. So I hope that's a convincing explanation for why Bitcoin is long entropy. We went through the first principles approach, and then we looked at some of the empirical data of how Bitcoin has survived adversity, as well as responded well to global adversity that had nothing to do with it. So that concludes the video. If you enjoyed this video, hit the like button or subscribe to the channel. Let me know your questions or comments in the comment section below. Thank you so much for watching, and I'll see you in the next video. Bye.